Hello, my name is William Peters of Peters Wealth Management to discuss the importance of succession planning. Farming isn't just a way of life, it's a business and it's your legacy. But here's the thing, most farm legacies don't survive past the second or third generation. Why? It's not bad luck, it's lack of planning. Now is the very best time to start. We recommend to start your succession plan while the parents are in their mid-50s or earlier. As advisors, we have seen unplanned health event affecting mental capabilities such as stroke, dementia, and other such critical illnesses. If the parent or parents are deemed to have lost their cognitive abilities to conduct their affairs, the last known legal documents prevail and no changes can be made. Also consult with a legal professional when drafting such documents. And often it comes down to tough conversations nobody wants to have until it's too late. We at Peters Wealth Management always meet with the farming parents first to get a full understanding of the dynamics and what they would like to see happen. We then meet with the biological farming children only and their parents. A final meeting with the farming parents, children, and their spouses. The earlier you get this process completed, you significantly increase your chances for a successful transition. Let me be real for a minute. If you don't have a solid succession plan, your hard-earned assets could end up tangled in family disputes or even worse, in an estate sale, tax court, or gone forever. Land prices are only going up and expansion isn't getting any cheaper. It's tempting to stretch your borrowing, but overextending can put everything you've built at risk. So, where do you start? Every operator needs a written, comprehensive financial plan. That's not just for you, but because lenders now demand to see all your numbers, assets, debts, inputs, capital costs, income, and more. If it's not on paper, it doesn't exist. Let's break down some key components. You need to track your cash flow, income, debt, loans, financing costs, land, mortgages, insurance, acquisition cost base, and fair market value. Don't forget land rental costs and every input you buy for your operation. Does your operation have the required liquidity without borrowing from a bank to buy out family members who do not wish to farm? It sounds like a lot, but having all the details makes life a whole lot easier down the road, especially when it comes time to hand things over. Now, here's the tricky part, succession. Are your family members the right choice for the next generation? Sometimes they are, sometimes they're not. Ask yourself, who actually wants to farm, understands the business, the importance of managed growth, and perhaps most importantly, is best able to handle the stresses of farming, and who just feels obligated. Being fair or equal isn't always what's best for the farm or the family. The law treats farming and non-farming children very differently, especially when it comes to rolling over assets. Is your lifetime capital gains exemption still intact? Does your farm qualify for tax-free rollovers or the lifetime capital gains exemption? If you don't know, that's a red flag. And don't forget the legal stuff. Do you have a shareholders agreement in place? Is it fully funded and provide the liquidity to equalize the estate? That's the kind of thing that keeps the peace when the unthinkable happens. This is where a robust risk management plan will shine. Here's my tip. Talk to your trusted professionals who understand the complexities of succession, not just an accountant. Peters Wealth Management will build a complimentary financial plan and coordinate with your accountant and legal professionals if you do not have a team in place. If you do, we recommend you do the same. Your written plan should be comprehensive, coordinated, stress-tested, and provide solutions vetted by a tax and estate planning professional. Get your plan in writing. We recommend that you review it every year or when there is a major capital expenditure. It's not just about protecting your land, it's about protecting your legacy. Remember, farming is a business, and your family's future depends on how well you run it. Failure to plan will come with an excessive tax liability and could also create something known as double taxation. Peters Wealth Management has built-in solutions to deal with taxation and equalization of your estate today and tomorrow. Don't leave your legacy to chance. Your surviving spouse's financial peace of mind will be your legacy. Remember, if not properly structured or you do not have a detailed set of documents in place, the transfer of your assets may take years to settle while incurring significant legal fees, costs, and CRA entanglements. Share this with your family and community members. If you are feeling overwhelmed but understand how important this is, please give us a call. Visit our YouTube page for all our educational videos. Remember to subscribe. Thank you.